Hey everyone, welcome back to Corporate Decoder. Today, A.V.R just filed an 8K and I am seeing one key move that could reshape their operations. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is expanding its footprint in a big way, and the timing of this move is really interesting. Alright, let's dive into what Anteris Technologies Global Corp has reported. This filing is an 8K, which basically means they're reporting a major event that shareholders should know about right away. The main story here is about a significant lease agreement. Anteris Technologies, through its subsidiary, has signed a lease for a massive office and warehouse facility. We're talking about approximately 181,436 square feet in Brooklyn Park, Minnesota. Think of it as them setting up a huge new hub for their operations. This lease might seem like just another rental agreement, but it is a pretty big commitment. It has an initial term lasting for quite a while, from September 2026 all the way to August 2037. They also have options to extend it even further, for 2 more periods of about 7 years each. Now, the rent is not small either. They'll be paying a monthly minimum rent. Initially over $152,000, this amount will go up over time with annual increases and other charges like real estate taxes and operating expenses. The interesting part here is the rent abatement. For the first 3 months, rent is completely waived, as long as they're following the lease terms, and for the next 9 months, they'll get a partial break on the rent. This is probably to help them get the facility up and running without immediate full financial pressure. Now, why is this significant? Well, growth often requires space. This large facility suggests Anteris Technologies is preparing for considerable expansion. We recently saw headlines about them potentially looking bullish if their DuraVar device performs well. And this lease could be a direct move to support that potential growth and upcoming product launches or increased manufacturing needs. When we look at Anteris Technologies, they're in the healthcare and medical instruments sector. They have a market cap of around $543 million and employ about 174 people. Recently, there was news about a large public offering where they raised $200 million. This lease agreement, while specific to real estate, happens right after they secured significant funding. This definitely makes sense. They're using some of that capital to secure the physical infrastructure they'll need. Their common stock is traded on the Nasdaq Global Market under the ticker symbol A.V.R. This shows they are a publicly traded company subject to these kinds of disclosure requirements. It is also worth noting that they are classified as an emerging growth company. This classification means they get to use some relaxed regulatory requirements for financial reporting compared to larger, more established companies. They've elected not to use the extended transition period for new or revised financial accounting standards, meaning they're likely trying to stay current with reporting. This large facility lease, signed on the 23rd of April 2026, coincides with other optimistic news. Just on the same day, there were reports that Anteris Technologies is seen as potentially bullish if their DuraVar device's paradigm study delivers strong results. This lease could very well be a strategic move to prepare for the potential commercial success of that product. And just a day after this filing, news broke that Anteris Technologies priced a $200 million public offering. This is huge. It shows they are actively raising capital. Combining this funding with the new facility lease strongly suggests they are in an aggressive growth and expansion phase. They are clearly investing in their future operations and capacity. When we think about companies like this, securing physical space is a tangible sign of their confidence in future demand and operational scaling. It is a concrete step in bringing products to market more effectively or expanding their research and development capabilities. What is particularly interesting is the timing. This lease filing comes out on the same day as positive commentary about their product pipeline and right before a massive capital raise. This coordinated timing might be intended to signal to investors that the company is not just planning for the future, but actively building the infrastructure to support it. Looking at their institutional ownership, we see significant players like L1 Capital, Nantahala Capital Management, and BlackRock. These are major investment firms, and their presence suggests a level of confidence in the company's prospects. This lease agreement, as a sign of operational expansion, could be seen as a positive development by these holders, especially when paired with their funding and product news. My take on this is that Anteris Technologies is making calculated moves to support its growth trajectory. The lease is a significant operational investment that directly supports their ability to scale. The question will be how quickly they can leverage this new space and if their product pipeline continues to deliver as expected. This expansion seems to be a bet on future success, fueled by the recent capital they've raised. The risk I am watching is whether they can adequately fill and utilize this large space efficiently to justify the costs, especially as they navigate market adoption for their medical devices. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like, subscribe, and join our Discord community linked in the description.